We are going to be talking about multifamily investing today, and we have John Makarewicz.
We have 3 golden rules. Number 1, we only do fixed rate debt. Number 2, we only buy deals that are cash flowing on day 1. And number 3, we always have 6 months of principal and interest in reserve and 10% CapEx contingency budget in place. We grew 65% in 2010 and 2011 in terms of revenue, while many agents were still referring us short sales. And I'm like, you haven't figured out how to do these yet? It's the market, right? Like, that's where the transactions are. Day 1 of practice at UCLA, for whole first day, was how to put your socks and shoes on. If we don't get that right, a blister might develop, your shoelaces might come untied, and that might cause a turnover, which would cost us the game. And how you do one thing is how you do everything. That's really what it boils down to. Do we have the right people? Do we have the right process in place? And is our product compelling? If you just work on those 3 things, generally things come together.
He is the president at Ferris Capital Partners in Atlanta. And before we get started, make sure that you guys subscribe wherever you are listening, because we want to make sure that you don't miss out on any of the upcoming episodes that we have, so that we can continue to provide more value for you and that our show can reach more people as well, to help more people build passive income and pursue financial freedom through real estate investing. And let's go ahead and get started. John, welcome, and thank you for joining us today.
My pleasure, Vince. Excited to be here today.
So what were you doing before real estate? I'm not sure what things were like for you kind of growing up, if you grew up in the Atlanta area or if you moved here later. And what did things kind of look like coming up until you went to college?
Yeah, interestingly enough, I was born and raised in Atlanta, although my dad was kind of climbing the corporate ladder. So spent a couple years in Charlotte and a couple years in Chicago, but always ended up back in Atlanta. And in high school, if you had asked me my junior or senior year, I would have thought I'd be a filmmaker. That was kind of what my passion, my excitement. I'm big into music, big into film. I still play music today. I've got a couple bands, nothing that we're like touring or playing live shows, but just guys that we can get together and play with. But film was always my thing. In fact, I went to Florida State because they had an incredible film program, but it was very competitive to get into. And I wasn't able to make it into that program. And so, interestingly enough, after a few years at Florida State, I was just kind of struggling to like really adapt to true study skills. In high school, I could kind of get A's and B's, maybe an occasional C, but I can caress that or massage that with some charisma into a B. And, kind of faced with the reality of like, oh, I got to like read 300 pages tonight. And so it's an area of my life that, I don't have a lot of regret, but I look back on and I'm a little like embarrassed, right? Because I was in a position where my parents could pay for that college. Like I wasn't in student debt. And I just felt like I let them down. So after about 2.5 years, that guilt in a sense was weighing on me. And I said, you know what, I'm going to go home. And, I was having a little too much fun at Florida State, and I'm going to figure out what I want to do. And so I was attending school here in Atlanta, and was waiting tables and bartending, and, just how life sometimes happens, met the love of my life, and we've been married for 23 years. And, all that said, we found out we were pregnant pretty early in that process, about a year in. So, at that time at Florida State, I was a member of a fraternity, and a couple of guys that were a few years older that I was really close with kind of all just randomly ended up in real estate. I mean, one was commercial, but another friend, Mike, was in residential, and he was working for a real estate team in town Atlanta. So I said, you know what, maybe I'll just get my license and do real estate until I figure out what I really want to do. And then fast forward 20 years later, I built a real estate business that, had a 9-figure exit with private equity. And, so it's just, I kind of in a sense stumbled into it. But I think what I learned is that, all business is marketing and sales at the end of the day, right? And I had an innate ability, I think, to connect with people and build trust quickly. And so I found a lot of early success in real estate. Now, this was like 03, 04, 05, 06. So, crushing it. And, at my age, making, $150,000+, and this was like, obviously pre this wave of inflation we've received. So, I really found that I enjoyed it. And then what happened is the Great Recession occurred. And then that led to the company I was working for. Great guy, great business. He's still around today, actually. But he started saying, well, I want you to call expireds and for sale by owners and all this stuff. And I'm like, well, if I'm going to do that, like, I'll just do that for myself. Why should I give you 70% of the commission if, I'm prospecting, right? Because he was providing leads up to that point. So, to kind of make a long story short, I ended up connecting with a guy named Mark Spain here in the Atlanta market, partly because my mom's interior designer was his interior designer, which like we figured that out. I was like, oh, okay, well, that makes it easy to make a connection. And then he still had billboards up. And I'm thinking if it's an '08 and he's got billboards up around town, maybe he's not suffering like everybody else seems to be. And so we built instant rapport in an interview. He hired me, and we ended up building Mark Spain Real Estate together over from '08, and it's still obviously a business that exists today. But we did sell to private equity in 2021. I left in 23. Still have some equity in the business. Still very close to that business, but it was an incredible journey, man. I think back about all we accomplished, and it's always interesting. It's the hardest parts of that process that are the ones I look back on most fondly, like navigating the Great Recession with him and the team. And, going from '08, where I joined in '08, but that's the only year our company ever had a reduction in revenue. And like watching him really just go, I'm not going to like accept the fact that the market sucks as an excuse to do bad business. Like, we're going to figure this out. And so that was short sales, which eventually led to some relationships with companies like Invitation Homes, that were buying single family rentals. We were able to leverage that relationship, closing a ton of business with them, reinvest it into the business because we knew that would end at some point. And then that, gave us money to start marketing on radio and television to really build the Mark Spain Real Estate brand, which allowed us to then grow to where we closed $4 billion in real estate in 22, the year I left, but they're still hitting about that number, even despite the current challenges in the residential real estate market. So something I'm very proud of for sure. But yeah, totally by accident, I guess, is just kind of stumbled into it in a sense.
I have some really interesting questions on these.
Yeah.
So, okay. So you had left Florida State, came to Atlanta, and you would think that if you hadn't finished college there and then you were bartending, how did you manage to get the skills or the experience to be part of a company? Or did you create a company that had a 9-figure exit, or were you like one of the co-founders, or were you an early employee, or like what was your kind of role in that, and what kind of business was that?
Yeah, so it was Mark Spain. At the time I joined with Mark Spain, it was the Mark Spain team. So kind of that Gary Keller millionaire real estate agent model concept. And so around the time I joined, he had actually just gotten remarried, and he was looking to get out of the day-to-day, like he was still going on listing appointments. And so when I joined, there were a couple other, I think there was 2 other listing partners at the time, 1 buyer agent and a few admins. So it was like 9 of us. And so by hiring me, that allowed him to get out of the business of going on appointments. Now, if it was a larger client, an important client, he may still attend a meeting and then pass it off. But pretty quickly, he got out of that because he was working with a coach who was saying, like, look, like in order for you to grow this, you can't just be running around going to listing appointments all day long. Like, you need to work on the business, not in the business, right? And so after a couple months, it was about 6 months in, he came to me and he's like, my coach is telling me I only have 1 buyer agent. And that's like normally it's like reverse. Like most real estate teams have maybe 1 listing partner that supports the main agent and then like 3 or 4, buyer agents.
Right.
And so he came to me and said, I'd love to challenge you with this. Like, if you can help me build the buyer team, I'll just give you a percentage of the revenue. And, if you can grow the revenue, you're going to get a percentage of that. And so I was still selling as a listing partner, but also managing and hiring and building up this buyer team. And so that went well. And then just incrementally over time, director of operations became my title. I sort of stepped out of the day-to-day selling of real estate, got my broker's license, right? So I could take that responsibility on. And so up until about 2016, we were operating with Keller Williams, as a team within Keller Williams. And so in 2016, we really realized, and it was actually, in a sense, Gary Keller's, I say, fault, but he was telling all these guys, because we were the top team at Keller Williams. And so Gary Keller had a top 100 agent mastermind and a top 10 mastermind. And the top 10 mastermind, he started talking to these, high performing, closing hundreds of millions of dollars or 100 million in real estate a year. Like, what's stopping you from going to a new market? Like, the process, the system, your marketing is not going to be any, it's the same marketing in effect will work in Atlanta, will work in Charlotte, will work in Nashville or whatever. And so we started getting really serious about that thought. And we realized that, we would need to be our own brokerage to really accomplish that the way we wanted to. Because what happened with Keller Williams made it easy for agents to do it, expand into other markets. But the problem is you actually had to get the market center owners permission to come into their market. And we ran into a roadblock pretty early on where they were like, nah, we don't want you coming into our market. And so, as business owners and I will back up a little bit, he did grant me some equity along the way. So, I had equity in the business. So we viewed that 2016 going independent as the true founding. We rebranded to Mark Spain Real Estate. At that point, my equity was really just a profit share, a profits interest, and then that converted into real equity. And so in 2018, we opened up Charlotte and Raleigh. And in 2019, we went into Florida, Jacksonville, Orlando, Tampa. And then in 2020, we went into Nashville and Chattanooga and Greensboro. Then the pandemic, hit. And, at that point, everything was going well. In fact, like a lot of people in those early days of the pandemic, there was a lot of panic. Like we're like, okay, we got to build a plan here. So we had a phase 1, phase 2, phase 3. Phase 1 was like, anybody who's not performing, we need to cut, save some costs. But within about 45 days, like everything just kind of opened back up, and as you probably know, the low interest rate environment, we saw like an incredible ramp up in activity. Yep. And I mean, in some cases it was actually frustrating because you would list a home and get 120 offers the next day. And you're like, that's almost as problematic as getting no offers, right?
It's way more problematic than getting no offers.
Yeah. So, we worked through all that. And so what ended up happening is very early on, Mark had this vision, Mark Spain, I should say, just to clarify, because my current business partner is also a Mark, but I'm talking about like 09 and 10. He was like, we're building this thing to sell at some point. So we need to be thinking about that in every decision we make. So, I need to figure out a way to not be so critical to this business. So, bringing me in as president, and he was still super involved, to be clear, and he's still the face of the business and he's still day-to-day involved. But, we really wanted to build out a leadership team and a way that as we expanded, a company looking at us could come in and say, oh, this isn't relying on Mark Spain hanging around. Like this thing is a company, it's an operation, it's a corporate thing, right? And so that was super helpful to know what the end goal was. And like anything in life, you say 10 years or 5 years, it's like, it took a little bit longer. But what I will say is as we sort of got clear on a number, on what we wanted to accomplish, and that came a few years later, we ended up exceeding that number by about 25%. So in my experience, it always takes longer than you think, but if you do the right things, you can often exceed even those goals, right? So that big, hairy, audacious goal idea, we always set big, hairy, audacious goals. And over like a 10-year period, we consistently achieved 35% revenue growth year over year. So yeah, it's looking at it now and talk about it, I was like, there's so many things and so many decisions and, so many stub toes and mistakes and false launches and deals, things that didn't work out. But, I'm of the opinion, if you make a lot of decisions and you're quick to make a lot of decisions, not all of them will work out, but some will be really good decisions, right? And kind of, get you ahead. So, that ability to just, accept the reality we live in, but not necessarily allow it to impact how we do business. In these down markets, for example, I mean, we grew 65% in 2010 and 2011 in terms of revenue, while many agents were still referring us short sales. And I'm like, you haven't figured out how to do these yet? It's the market, right? Like that's where the transactions are. So it's really just for us, a process of just like, stick to itiveness, never taking no for an answer, keep pushing. And if you fail, that's okay. Just pick up and move on, right? And come up with the next solution, right?
I have such an interesting question.
Sure.
And I don't know if anyone's ever asked you this question, and I only know a little part of your story from what you shared here so far. And then we're going to get into, how you've gotten into multifamily and what that looks like. And I have a lot of questions on that, which is where the bulk of our time together today will be. But just one question in my mind on everything that we've discussed so far is, if your mom didn't have the same interior designer as Mark Spain's mom, then what direction would your life have gone? Where would you be today? And what would have happened? How much is that random, strange occurrence of luck basically, played into the entire path of how life has unfolded? Because it's such a bizarre, random occurrence.
Yeah. It's such a good question. I've never really thought about it. I mean, I will say that what happened is I was, my mom and I are still very close. And so I was calling her saying, gosh, things just aren't really going well at the current company. I'm looking to make a change. And what I had done is I had actually left and just hung my license at one of these like kind of, at the time, they're not around anymore. I think it was called Solid Source, where you could just kind of hang your license for minimal monthly fees. And so my parents wanted to buy a lake house. I had a couple friends that needed to sell. So I did those transactions, which gave me some, commission coming in that gave me some time to kind of think about the long-term plan. I would have likely just called Mark anyway. But when I shared with them, Mark Spain, it just sort of came out through that because she was like, oh, Gail, I think works with him, and that's her designer. So I think that helped get the interview, but I likely would have just continued to call. But yeah, I hadn't really thought about it. I mean, it's amazing though. What I've learned in life is that relationships are so important. And, great example, a young man reached out to us yesterday, and I just jumped on a quick call with him. He's down in Naples, Florida, and he's like, between jobs, he's an analyst. And I was clear in the email, we're not looking to hire an analyst, but let's just jump on a quick call. And, my thing there is that there's been so many examples of that where, if you add value to somebody or you just pick up the phone and call somebody and so just not being afraid to ask for what you want, but then at the same time, understanding that. So that was just serendipitous, right? That they happened to have that. And I think it just helped break the ice in the interview. I will say that, there was another aspect that at the prior company, I was closing 100 deals a year on the listing side.
Wow.
So in terms of a resume, with the prior company, Mark's going, my listing partners are only doing 30 or 40 a year. How do you do that? And I'm like, well, I'm married, my wife doesn't work, and I've got a young kid and one on the way. So, nobody needs to tell me to go take on 3 appointments a day. Like I'll work all day. I'll work from 8 a.m. to 10 p.m., whatever it takes. It was that kind of a mindset. So part of it too, I had a chip on my shoulder about not finishing college, and like none of my friends have ever brought it up. Like I've never like caught any hell for it, but in my brain, it's just like, I want to prove something to the world that, if anybody doubted me, I'm going to show them. Right. And so I think that's a good example of a chip on your shoulder. Obviously that could turn up to be like, why am I carrying around this baggage? Like one of my favorite sayings of all time, it was from Gary Shandling, the comedian. It was actually in his journal, and he gave his journal after he passed away. I guess he left it to Judd Apatow, who was a film director, writer, and they were very close, but it said, love more, give more, give what you didn't get, drop the old story. And that's kind of how I try to live my life. Like give what give more, love more, give what you didn't get. I think that is the most powerful one besides drop the old story. So for me, I never allowed it to hang over my head as like a dark cloud, but there was that internal motivation to just, show my family that, hey, I recognize you invested in me and I failed, but like, I'm going to show you that that investment will still pay off. Right. And here's how.
Got it.
Yeah. So anyway, but that's an interesting question. I'll have to ponder that one a little bit more. Right. But life is like that sometimes, it's who and it's, sometimes luck. I mean, and that's what I will say. I get really annoyed when I hear a CEO talk about how smart they are and all this stuff. It's like, dude, so much of that was luck, Bill Gates is a great example. Happened to live in the one high school in California that had a computer, that he could work on, and
and his dad was actually pretty successful in business too. So it's like he had exposure to the right things, the right people, the right school, all of that. And when you really narrow it down, I think it was in the book Outliers.
That's right.
Where, he was one of the 30 luckiest kids in the whole country on that one front. Now, of course, he had to do certain things. However, he was in the 0.0001% of people that had the opportunity for that to happen.
That's right.
So
yeah. And that's it. I mean, look, being born, a white man in, an upper middle class family certainly didn't hurt either. Right. There are advantages that come from that. And what I mean by that is specifically is my dad grew up in poverty, but, retired as the CEO of a Fortune 1000 company, and there was a lot of trials and tribulations. His company was acquired by private equity. He was promised a job that went away. But he hung around, and then he ended up still earning the top job. And, so seeing that journey and, being exposed to his friends and business associates, my parents were the types that if business people came over to the house, like we were a part of that. We were at the dinner table alongside them. So just absorbing things and I mentioned my mom earlier, but my dad did pass about 10 years ago, but we were very close and often talked about business. I will say there was a couple years where in real estate, he kept saying, well, when are you going back to college? And I'm like, I don't know, man, and then, to be able to see what we were able to accomplish. I mean, the way I view it is behind me is college for me. I mean, I read about 60 books a year. So as they say, education is wasted on the youth sometimes. And I would think I was a prime example of that. In other words, I would actually probably love to go back to college today.
Now, because you understand how you can apply it. You're more of a learner. And I've seen, interestingly enough, more people really, really read a lot of books about investing, business, personal development, and then do a lot more with people that just stopped learning after college.
Yeah.
I really realized everything that I've learned that's important about business and entrepreneurship, I've learned on my own through experiences and creating businesses and and reading books
Yeah.
and through my network. However, there is this interesting level of personal professional development that you get from college
Yeah.
that I've noticed that oftentimes people who didn't go to college are kind of missing.
Yeah.
And I don't know how to explain that exactly, but I've had thousands of conversations with people about investing, success, money, and business. And I'm positive that it's true. And in fact, I've listened to hundreds of episodes of the Bigger Pockets podcast back in the day when I was learning about real estate. And I sat there, I was in cubicle hell, we'll call it. And I was thinking, what really is separating these people who've created success from those who don't? Because there's some of these people who they just started a year ago and they've already had a ton of success and built a really meaningful portfolio. And it's just unbelievable that they've done this. Meanwhile, other people have this much slower trajectory. And I couldn't put my finger on it for the first 50, 60, 100 episodes. And then finally one day it hit me like a ton of bricks. And I was like, it's personal development.
Yeah.
The people that have a really high level of personal development, they could come into real estate investing and build and achieve success very quickly. But even if people found really good deals or got really lucky, if the personal development isn't there, they're not going to be able to do it no matter what.
Yeah.
But let's pivot to multifamily because there's a lot that we want to get to there.
For sure. Absolutely.
Okay.
Looking forward to it.
So how did you start to get onto the real estate investing side of things, specifically multifamily at Ferris, where you're at right now? And then I want to get into the nitty gritty tactical stuff on, we'll talk about the deals you guys have done so far, the types of deals you have been acquiring, how you're underwriting and looking at these deals, and if you're setting up syndications that you're doing with investors. I looked on the website at some of the deals that you guys have closed so far. So I definitely want to talk about those, some trends that I noticed there that I want to ask about. So how did you end up at Ferris in the role that you're in as the president there, in that pivoting from kind of the agent side of the world over to multifamily investing?
Yeah. So as I mentioned earlier, relationships, right? So what happened is about 5 years before I left Ferris or Mark Spain Real Estate, this giant gift basket arrived at my office, and I wasn't necessarily expecting anything from anybody. We hadn't closed the deal, or, we had a couple joint ventures that we had put together at Mark Spain Real Estate with title and lending. And so occasionally things would come across from them. But I was like, I wonder what this is. And it was all this Canadian stuff. It was like maple syrup and, Canadian candy. And so I opened up this card and it was from Mark Ferris. And he just said, hey, I'm up in Canada, in Ontario. We have the largest team in Canada. I've been watching you guys from afar. If you're open to it, I would just love to connect and talk. He had read this book, Giftology, and that's the recommendation. Like, if you want to get in touch with somebody, send them a gift, right? It kind of creates a law of reciprocity effect where you're like, well, I got to follow up with the guy, and so what ended up happening is I called him up and we hit it off immediately. So we started having monthly calls just to talk shop. Sometimes when you're the top dog in your market, it's difficult to find people that you could just kind of, vent, brainstorm, talk about successes with. And because at Mark Spain Real Estate, we were expanding, we had like mastermind groups, but then what happened is like we went into one of their markets and they got their feelings hurt. And so it ended up being a really fruitful relationship for both of us. And so we just had developed a friendship through that process and, navigating the pandemic and all those things together. Right. And so what ended up happening is when I left Mark Spain Real Estate, I had like a very generous, 9-month severance package. And I'm like, I'm just going to take some time and relax. And I felt like I'd run this 20-year marathon at the prior company. And, what happened is pretty quickly I got bored. My wife teaches yoga and Pilates, so it's not like full time, but she wasn't around during the day. My kids were at school. And so I was just like, man, there's only so many hikes and video games I could play or whatever. I'm bored. And so we had this existing call, right, as I mentioned. And so the call was coming up and I was like, oh, I forgot to let Mark Ferris know this. And so I shared it with him and we were chatting, and a couple hours later, he sent me a text and said, hey, I'd love to talk about this idea I've had. And so he had raised some capital as a co-general partner on a couple deals, coming in kind of to the deals with his marketing expertise and his operational expertise. And so he realized that, I can raise capital. I can do this. So that gave him the inspiration to start the business. And so when he realized I was effectively on the market, he proposed, hey, this is what I've been thinking about doing. are you interested? And so it was about a 3-month process because I was like so fresh out of the new role. And, to be clear, there was like, okay, like, do I know anything about buying multifamily buildings and investing? So what I did was what I always do. I bought some books. Joe Fairless's book, The Best Ever Real Estate Syndication book, was a good example of that. And as I was reading that, I'm like, okay, like this is it. Like business is business. Like I think, look, if you're talking about like pharmaceuticals or maybe something that's like super like microprocessors, like likely I'd struggle there. But when it comes to services and those kind of businesses, like I realized all my experience is transferable, right? It's people, it's process, right? It's product. I guess I'm kind of borrowing that from Marcus Lemonis or whatever, but that's really what it boils down to, right? Do we have the right people? Do we have the right process in place? And is our product compelling, right? And so if you just work on those three things, generally things come together. So we spent a lot of time talking, and then there was a conference coming up. So he invited me, paid for my flight and hotel to go out to the conference, and met a bunch of operators, sat through a lot of these sessions. And every night we'd go to dinner and just talk. And I called my wife up after the first day. It was like a 3-day thing. And I said, I think this is what I want to do. And so in a sense, it was also a bit of luck, just the right timing, him starting this new business as I was leaving my prior business, and, that relationship that we had developed. So I always tell young people, like anybody who used to work for me at Mark Spain Real Estate in their 20s, like, it's like, just get to know as many people as you can, give more, don't ask for things, like offer value, and you just never know. So I'm not saying this in a negative way, but often because we were larger than Ferris team, Mark's real residential business, if you probably calculated the tips going back and forth, I probably provided more to him. But I just like the guy. I like the conversations, and he absolutely helped me too. But it was like, I didn't go into that thinking, oh, one day I'll get a job out of this, right? It was just, so many examples of, different podcasters would reach out and talk, and they'd come into the office and we'd meet, and we'd just stay in touch because, once again, you're not thinking about what can I get from this person. It's just like, you just never know what could come up or when I might need somebody, right? Like, or wait,
it's super true.
Yeah. So, oh, wait, I met an asset manager that's so cool 5 years ago. Maybe I can call that person up and see if they need a job when we're looking for somebody, right? Versus going out on Indeed and just, hoping that the right person shows up. So I think it was those two things, that combination of relationship and the right timing, and an element of luck, that he was starting this business right around the same time I was looking for my next opportunity.
This episode is brought to you by Easy Street Capital, the lender built by investors for investors. Whether you're flipping, building a rental portfolio, or executing a ground-up construction project, Easy Street has 3 nationwide loan programs designed to close fast with no surprises. We're talking 24-hour closings, upfront terms, and in-house servicing from start to finish. If you're ready to fund your next deal, go to easystreetcap.com/launch-REI to get started, or you can grab the link in the show notes. Most real estate investors I know are overpaying in taxes simply because their CPA is reactive, not proactive. That's why we recommend TrueBooks CPA. They specialize in year-round tax planning for real estate investors, depreciation, cost segregation, entity structuring, and their clients are always surprised by what they were leaving behind. Do yourself a favor and find out what you're missing. Go to the link in the show notes and book a call with them. So, okay, multifamily I know more about than I would say several other asset classes. I probably don't know as much as you, considering that you're doing this every day. I've invested passively in a few LP deals in multifamily, but I will at least know good questions to ask. And so I can see that you guys have targeted some Class B deals in the Southeast, it looks like around Atlanta, Charleston, Tampa. I'm kind of curious, what type of deals have you guys been going for, and how many have you guys done so far in terms of volume and total units? I think I may have seen on your website that it's over 400. So these might be smaller buildings that are I don't know if they're in the range of like 20 to 100 units. Maybe you've got 4, 5, 6, 10 of them. And I don't know if that's fully up to date, but if you could kind of fill us in on what that looks like, we could dive in a little bit on some of these examples.
Yeah. So we very similar to my prior company, set big goals. So our initial goal was 100 units or more. And we started in 23. So we hired an analyst and a marketing person. Mark had a finance director from his other company. that for a period of time split duties and then eventually came over full time to Ferris Capital. So we, injected money into the business so that we could hire a team, because Mark had amassed about a $30 million personal portfolio, some multifamily, some office. And so he had a lot of experience personally investing. But we're like, we've never done a 100-unit apartment building, right? So we need to find some people that understand this space. So by injecting that money in, we weren't bootstrapping, in other words, we invested money in the business. So we identified our first deal in September. It was actually 104 units, so right on the money, Class B. Our goal is to find Class B in like A and B areas that we can make the nicest Class B in that area, while not trying to get outsized rent, just being like the highest quality. And then at both of our residential businesses, there was an extreme focus on resident experience. So, for example, Mark Spain Real Estate was the first real estate brokerage to have 1,000 five-star reviews on Zillow. In fact, they flew us out to Vegas and put us in a suite at the Caesars because we were the first. And so, that focus on resident experience. So those kind of concepts we brought over. So we wanted our residents to like be so looked after, right? If we're going to ask them to pay more in rent after a renovation, they should feel value first, right? Upgraded amenities, leasing centers that respond within 1 to 2 hours to any requests. Like our goal is to answer the phones live 70 to 80% of the time, and just monitoring those KPIs. So that resident experience, that also extend to investor experience. So 104 units, we got that one closed. It was actually a Fannie Mae assumption. So fantastic, because we had a very low rate in a high interest rate environment. Got that one closed in March, and around November of 23, we put a 2-property portfolio in Charleston under contract, closed that one May 1st, also an assumption. And that was about a $24 million raise, and we got it done. So that gave us that confidence. But then what happened is, deal flow has been so challenging, as you probably know. So right now, a lot of investors or syndicators bought deals in 18, 19, 20. Perhaps they did bridge debt, floating rate loans. And so it's all in the headlines, right? Everybody knows this wall of deficiencies that's out there in the loan market. And so what we were seeing is, typically a 20 to 30% bid-ask spread, where the seller's wanting this and this is what it's worth. So it right now takes us 300 deals sent to us. Now, to be very clear, half of those might be out of our buy box or Class A or too small or whatever, but we track every deal that comes in. It's 300 to find one that we put an LOI in. So, setting some systems in place where our acquisitions person, his goal is 10 meaningful conversations with brokers a day, adding value, following up. If you send us a deal, we'll give you feedback, even if it's outside of our buy box, just little things like that, just to show the brokers. And so what happened is we found, for example, a 36-unit deal that actually sat between that 2-property portfolio. So one's in Goose Creek, one's in Monk's Corner, and this one, literally, it's like 10 minutes in either direction. So that gave us this opportunity to bring another asset in that had townhome-style buildings. So, if they don't like Goose, hey, you might want to check out our Strawberry Station deal over here. It's townhomes. It'll give you more privacy for you and your, 18-year-old son or whatever. So that one made sense. And then we found a 66-unit deal in Georgetown, South Carolina. Credible cost basis. We got it at $95,000 a door. In fact, interestingly enough, that was a property that I was opposed to because it was such a small market. But it was about 6 months. It was off market, then it came on market. And so we took a second crack at it when it was on market. And in a good way, the team convinced me. I surrounded ourselves once again with experts, and they're like, trust me, this one's going to work. And so, I was proven wrong. It's tremendously well. And then we closed a 114-unit deal in Noonan last year as well. And we have a 100-unit deal under contract in Smyrna, Georgia, as we speak. We're about 70% of the way through the capital raise with about 4 weeks to go. So that one will be closing hopefully in mid-June. And then we just put another one under LOI in Noonan, which is 60 units, but it's a mile and a half from the existing asset. So I guess what I'm sharing there is that when we do those smaller deals, it's generally because they're very close to one of our other assets. So we can have one property manager who oversees both properties, bringing in a leasing manager. So we're, lowering some of our costs, and then the maintenance team can work both buildings. So that's the plan for that new Noonan deal, similar to that Strawberry Station deal I mentioned earlier. So without counting the 2 that are under contract that have yet to close, I think we're at like 454 units. I think if I get my numbers correct there. So, look, it's funny. We thought we would have been at like 10 by now, but it goes back to set big goals such that if you fall a little bit behind, you're still happy. And, we're very happy. I mean, yes, we'd like to have closed more, to be clear, but that's our biggest constraint. It's deal flow. In this business, we're a syndicator, to your point. You kind of mentioned that earlier. So we are raising capital from retail investors. And so, that's a constraint, and, our ability to raise capital, we have to solve for that all the time. And then our ability to source deals. So that's where we focus most of our attention on. And then, of course, on the resident side as well.
Got it. And how have you guys had so much success with raising capital? Because you guys have raised really significant amount, especially for being newer at this. I think that people tend to scale a little bit slower, and oftentimes with their own capital on some smaller deals, and then maybe raising some from friends and family.
Yeah.
But it seems like you guys have actually jumped pretty far to the deep end pretty fast.
Yes. So, not unlike a lot of groups, friends and family were an initial factor, right? So because Mark had such a big business in Canada, there were billboards and things like that promoting that business. So, even though this is a totally different business, there's no relationship between the two, it's not like a subsidiary of or anything. The Ferris name in Canada, particularly in Ontario, is sort of well known. Even if you haven't done business with them, you've seen the billboard. So that is where we primarily raise our capital. So started off with, kind of friends and family, referrals from those people. We always ask, who do you know that you think could, benefit or might like this type of investment? And then we do advertise on Facebook primarily. We've done a little Google AdWords as well, but Facebook tends to work best for us. But here's the thing. It boils down to this. Like, at the end of the day, if you want to raise capital, there's no magic pill, man. You got to get on the phones and you got to talk to investors. And so Mark Ferris, my business partner, when we're in a capital raise, he literally clears his calendar. For example, we do a same page meeting once a week. We do it at 7 p.m. on Monday nights because our 8:30 huddle ends at 8:45. At 9 a.m. until 7 p.m., he's on the phones, dialing for dollars. And what we've learned is that even with past investors, so one thing that we're really proud of is 40% of our investors to date have invested in multiple deals with us, even without an exit. So, quarterly touches with those investors where he just calls them with no agenda, just to say, hey, I just wanted to touch base. You're in our Largo deal. I wanted to give you an update on it. And they may say, do you have anything else going? Yeah, well, in fact, we have the Smyrna deal we're working on now. Consistency with our outreach and touch. And we do have an inside salesperson as well. So when those Facebook leads come in, we have a speed to lead approach where she calls them as quickly as possible, tries to figure out if there's true interest, if they have liquidity, if they're accredited, and then we go. So we are doing the 503C. So, these aren't friends and family deals. We are going out into the marketplace and advertising. The first couple, we pulled in a few from Facebook, but most of it was his relationship, friends and families and referrals, and then in each subsequent deal. And what we've actually found is that leads from 2023 are investing in 25 and 26 for the first time. So staying in touch with those people, sending out a weekly newsletter, just checking in with them from time to time, adding value. So it's been a lot of hard work. It's not easy. And it's interesting, occasionally we hear from people, like I was on a podcast where the guy's nice as can be. And he's like, I'd love to learn how to capital raise. And he was asking me, well, what platforms? I'm like, dude, you can advertise on Facebook, but if you wanted to get involved, you're gonna have to pick up the phone and call everybody and probably call them 2 and 3 times, and so it's not easy, but that's the model, man. It's just a focused attention and a lot of focused effort.
I have some questions on some of the deals that I saw on your guys' website.
Yes.
So it looks like there's not a cash on cash return that's listed there. And it does show that there's equity multiples. Almost all of them universally have 2x as the equity multiple, and almost every single deal has exactly 20% average returns per year listed. And usually I see IRR listed rather than average return.
Yeah.
And from all of the multi deals I've seen in recent memory, they usually have lower IRRs projected that, may end up. Usually the IRR ends up being around, it depends on the deal, but anywhere between 12 and 16%, maybe 15 to 18 in good cases. And so I'm curious to see if the projections that you guys have done do end up translating to what you guys actually get on the back end. And it's going to be some time because a lot of these deals have been initiated in the past year. But 3 to 5 years from now, when you guys do exit some of these deals, I would like to see kind of the case studies on the outcomes on these to see if the outcomes did translate to what you guys were projecting. And I'm curious if you guys are paying out quarterly distributions. And if you are, how long is it taking for you guys to start issuing quarterly distributions? And has that started yet? And if it has, what have quarterly distributions been looking like? And I know it's kind of early. A lot of times multifamily syndications won't start paying out until maybe the following year or like a 6-month delay. I'm curious what that all looks like.
Absolutely. So there's a couple of things, and it actually, now that you're saying it the way you said it, we probably could maybe put some ranges in there. But what happens is we've actually developed multiple share classes. So for example, all of our deals cash flow on day one. We have 3 golden rules. Number 1, we only do fixed rate debt. Number 2, we only buy deals that are cash flowing on day 1. And number 3, we always have 6 months of principal and interest in reserve and 10% CapEx contingency budget in place.
Got it.
So that's our filter. So there have been times where our acquisition guy goes, "Hey, this one doesn't qualify for Fannie, but there's this bridge option." And sometimes you start going down the path a little bit, but usually after a day or two, somebody speaks up and says, "Hey, remember our golden rules here." And the fact that we're having to bend over a little bit to make this work, like bend over backwards, it's just like maybe we should step away from this one. And this one deal in particular I'm thinking of, it's an 80-year-old owner who owns it. He developed it back in the 80s, and the thing's probably throwing off so much cash that he's okay with 80% occupancy, but the agencies aren't, right? And so in that context, we just communicated with the broker that if they can get it up to 90, we'd be a buyer, but we're not doing it at bridge. A lot of it's in the selection process, right? And so I will say that because we don't have an exit, and most of our investors are Canadian and they're retail. I'll answer the AAR question versus IRR. We initially did advertise IRR, and we just got a lot of questions about it. And I'm not saying these aren't like sophisticated people. They're entrepreneurs, they're accredited investors, but many of them had bought their own rental properties or, owned real estate personally. And so it just seemed like their language was more around annual returns. So our deal deck has IRR, all that's in there, it's disclosed. But just in terms of what we put out forward, because we're not really going to institutional investors, that's where we focus more on the AAR. And look, these are projections, but part of it too is that, for example, we have an A-class share that pays a 12% cash on cash return, sits above the other investors. We only generally take $1 million, say on a 10 million investment in that. But we've had a couple investors that are really looking for that consistent cash flow. Class B is 100,000 minimum. And, the splits are like, 70-30 at 15 IRR, they would go to 50-50. And then like C is like 250 minimum, and then D is 750 minimum. And so in those, depending on the deal, that split changes, right, to where it becomes a lot more attractive. So that's helped us. For example, we've had a couple investors who started at 100, but now are putting 750 into a deal because they like the fact that, I'm getting, 70-30 throughout, or 80-20 in Class D throughout the whole transaction. So there's sort of a range of annual returns. And I think what happened is she just kind of probably went with the headline number in terms of putting it on the website there, but they could be anywhere between 18 and 20. But, we are in the process of moderating those a little bit. In other words, there's deals we've walked away from because we couldn't get it to a 20% annual return. And part of that is that we don't have an exit. And so our investors, like what we found is like they need to see something that seems really compelling. So you're dead on. I mean, at the end of the day, it's all about the exit and what you really accomplish. But I am happy to report we do have one deal in Monk's Corner. It's part of that portfolio that is it's been impacted in the past 6 months. It's kind of a working class rural market. It is in Charleston MSA, but it's about 45 minutes out. And so we've had to moderate some of our rents because we started seeing vacancy increase, and we started seeing delinquency increase. Look, we've got rising gas prices, rising grocery prices. So one of the benefits and what we tell investors is that that's why these are long-term holds. We're not trying to flip this thing in 60 days or even a year and a half, right? It's a 5 to 7 year hold. So, if market conditions shift, so that's kind of where, time will tell. But, it's one of these things. I think what I've learned in this business is that a lot of operators and owners really think about the resident as a line item on a P&L statement, right? And, if there's ways that you can add value, whether through when somebody does maybe fall a little bit behind, work on a payment plan. Now, we running a business here, so if they fail on the payment plan, we unfortunately might have to evict, right? Staying in close contact with our residents such that, for example, at our Georgetown property, we had 2 folks recently that had a temporary loss of income. They lost their job, but were rehired 3 weeks later. So just come talk to us. We'll work with you on that. We'll figure out a way to make this right for you. Even if we have to, put some rent, 6 months out into the future and collect it back then. So just putting the resident first has been a bit of I wouldn't have thought it getting into this business, but it's almost like a differentiating factor. I mean, Vince, when we take over a deal, some of the stuff we really truly uncover post even unit walks and lease audits and due diligence is pretty disturbing. Like people, for example, that were waiting 6 months to get their garbage disposal replaced, or, just simple things. In one example, the woman had a light switch that would turn off the breezeway lights in her house. And she's like, it doesn't bother me, but I thought you would want it fixed. It took a year and they never even fixed it. We did it that day when we heard about it. Right. So, we have a 48-hour maintenance guarantee, for example. So, there's never perfection. There are times where we slip a little bit here on, our NOI compared to our pro forma, but, we have a very disciplined process. I meet with our property management team multiple times throughout the week, just me and the regional and the area manager. And then we have strategic meetings with each of the PM and leasing management and maintenance teams on a weekly basis. So we are just very in the weeds when it comes to what's happening at the property level. So if we see an issue, we can immediately address it versus finding out a quarter later when the financials come through like, oh God, what happened? Now, to answer your distribution question, because we buy deals at cash flow on day one, distributions typically start by month 3 to month 6. And we do a catch up back to day one. And so, we're buying these deals where they're already cash flowing 5, maybe 5.5%, potentially 4.5%. And then as we renovate and, increase, those numbers will obviously go up. It is, of course, a factor of the ability to do these cash distributions. And we are proud to report we have not missed one in our 3 years of operations. But, look, something will happen at some point. I don't care how disciplined and, buying the right deals, things like pandemics, black swan events happen, right? So you have to be ready for those. But so far, it's all every deal we're operating on, we're either exceeding our pro forma projections, we're dead on, or if we're a little bit behind, we have a plan to get it back on track.
There's one person that really comes to mind that I think would be a life-changing connection for you in the way that Mark Spain was in a previous chapter that you had, and I'm willing to bet on it that it's correct. I don't know how much time this person has to be able to, connect, but maybe once in a while at least. But I think it would be a life-changing connection if you could chat even once a month with this person for 30 minutes. It's the second guest we had on, Jared Sturm. He's got over 2,000 units in Cincinnati. There's not a better multifamily operator out there than Jared. And he's been doing this for a decade. And the way that he puts, residents and resident experience first, and the types of things he's implemented in communities for, the rate of people staying there because they want to live in the communities that he's creating, and the types of opportunities and paths he's created for the people working for their business, SNS Capital. It's world class. And the experience that he's done putting together a bunch of syndications, the way that he looks at structuring debt, the types of deals that he goes after, and the way that he finds value add opportunities, and the way that he thinks about structuring refinances to return investor capital and exits. It's all really interesting and strategic. And I think it would be one of the most valuable professional connections that you'll ever have, is my prediction.
Oh, wow.
I'm happy to connect you guys sometime.
Love that.
On an email or something, I'll connect you guys. But there's one more thing that, it's going to kill me. What was it? It was just on the tip of my tongue. It was the last thing that we were going to touch on, I think, before we wrapped up. I think it was, you're really big on John Wooden's philosophy and performance. If you could maybe just spend a quick minute or so touching on that, I think that would be really interesting for people. Yeah.
So, his book on leadership, it's interesting because it's one that's not on Audible, or at least it wasn't a few years ago. And I only mention that because I know, and look, I do it as well, but I like to hold the book in my hand, take notes, and, pull information. And like Audible can be a very valuable tool whenever I'm on a road trip and I'm not on a call. Like if I'm traveling to one of my assets, between calls, I'm listening to something, audiobook or maybe a podcast, right? I love like How I Built This, right, by Guy Raz, like just hearing these entrepreneurial journeys and stories. But this is when you have to buy and you actually have to read. But, there's, for example, this great story where on day one of practice at UCLA, the whole first day was how to put your socks and shoes on. Now, this was, of course, in an era where there wasn't elastic in the socks, and it was like those Converse, kind of like they still sell that kids think look cool, but that's what basketball players wore. And his whole thing was, if we don't get that right, a blister might develop, your shoelaces might come untied, and that might cause a turnover, which would cost us the game, right? And so what he was really saying is the small details matter, and how you do one thing is how you do everything. And interestingly enough, whenever we've had a high performer that failed eventually over time, it's because they were missing the details and they weren't minding the small things. And I think the difference between like a good company and a great company is often 5% more effort, right? It's like, after a phone call, do you send an email recap saying, hey, here's what we discussed, here's what my takeaway, sending a handwritten note to an investor after a great conversation. These are all things we do. And so, finding those little things. So that's kind of really it. It's just that idea that you have to show up. And so imagine you're, started as a freshman at UCLA, your senior year, you're still going through that lesson, how to put your shoes and socks on correctly, right? The very basic stuff, getting those small things right is, I think, where a lot of people miss. You can find the best possible deal in an incredible market, but if you're missing the small details, it could turn out to be a really bad investment. So candidly, we had an asset manager that we had to part ways with recently, and that's really what it boiled down to, is just the details, just missing these small things, but it's like death by 1,000 paper cuts. So that's really it. I love his team, like kind of pyramid, right? Integrity, like teamwork and that focus. And business is a team sport, right? At the end of the day, like if you don't have the right people in the right seats, and everybody doesn't have clarity in their role. So for example, everybody who works for us, we call it, it's not a job description, we call it a scorecard. It's like, here's your span of control, here's your authority, here's your responsibility, and what comes with that is accountability. So if you can just like nail down these 7 things or 5 things, depending on the role, everything's gonna be great. We got you, right? But understanding that as a team, if somebody needs help, like I always tell people, look, like when I'm on one of my assets, if I see a cigarette butt on the ground, I'm going to pick it up. So when I go on one of my properties and I see a property manager walk right past a cigarette butt, I'll say, hey, let me just pause you just for 1 second and just share with you a little bit about our expectations and experience. Like, look, I know you can't be on the property 24/7 and stuff might accumulate on a Sunday, but Monday morning you should walk the whole property, and Monday evening. And guess what? You're going to do it Tuesday, Wednesday, Thursday, Friday, and Saturday. Trash overflowing in the dumpsters. These are the kind of things there's a solution for. Call the bulk trash collector. Yeah, it costs $800, but get it done. Sometimes when somebody moves out, they dump their mattresses. And that's how you will lose a resident, because somebody who's near that dumpster is sick of looking at the couch and the mattress logged up against it. That's a simple phone call, just get it done, right? And so that's the key. It's like making sure you hire the right people, give them absolute clarity on those things, that span of control, what they're responsible for, what their authority is, when they need to ask permission, when they can free to make a decision, right? If you make that super clear, and once again, you hire the right people, I don't even have to really, I manage them, but I certainly don't have to micromanage them. We just meet on a weekly basis, walk me through your metrics, walk me through your KPIs. What was your number one deliverable from last week? And what's your goal for deliverables this week, right? So that's a big part of it, right? And that's what I learned from John Wood. And it's just the small details matter. How you do one thing is how you do everything. I had a team member once that was a delight, but I saw with vendors, like the tone in emails was really sharp and demanding, and the person could not correct it. And I said, look, yes, we're paying them and they're our vendors, but they deserve to be treated with respect. Because then I start to wonder, is behind the scenes she treating a resident like that, or would she talk to another team member like that, right? So just being vigilant and paying attention to all those details and ensuring your team is as well.
You really have this right mindset and this can-do attitude, and even learning new things. I'm going to read books and figure it out. And I can just see the way that you think about things. And, I'm sure that there will be deals probably here and there that miss expectations, but you'll learn from them and do them even better in the future. And I have no doubt that no matter what you stick with long-term, I think that you're going to find great success. The attitude and the approach that you have with how you think about things, that's what I see in the people that have built really incredible real estate investing portfolios and businesses. Where can people learn more about you to stay in touch with you or stay connected?
Yeah, Ferris Capital Partners. That's FARAS capitalpartners.com. That's our business website. LinkedIn, great place to connect. I'm always happy to jump on a call. I still have team members from Mark Spain Real Estate that reach out that just want some advice on something. I love to do it. But anyway, yeah, always happy to chat. So Ferris Capital Partners, we actually have a link where you can book a call and to talk if you wanted to connect. LinkedIn's another great avenue to get to know me better or to learn more.
Awesome. Thank you so much, John. We appreciate your time today.
Thanks, Vince. It was great. Appreciate you too.
If today's episode was useful, subscribe so you don't miss what's coming. We drop 2 episodes every week. And if you want to go deeper, join thousands of investors getting our free weekly newsletter at newsletter.launchrei.co or check the link in the show notes. See you next time.